Fifth sum regarding the especially this topic. Right. Now, question number 5. Question number 5. I just recap with the previous class format here. From the format, I'll proceed further so that you'll understand easily. So, రెండు working notes. In the previous class, the fourth sum, I explained about bad debt and provision for doubtful debts and all. In this class, my intention is to make you understand the entire calculations of provision for doubtful debts as well as bad debt in question number 5. After completion of this question number 5, we'll go for handling the complete final accounts where the provision for doubtful debts and bad debt exist. For solving such sum, as I already told you, you need to have the format here, that working note. Two working notes you need to keep in your mind to proceed further. So working note number 1, let me start here. Wait, I hope so everything is perfect here, the audibility and all. So as per the first working note, okay, how this will appear in the balance sheet is going to be calculated. So working note number 1. Working note number 1. This is going to be appearing in the balance sheet. Debtors, the debtors value. From there we have to subtract bad debt given in the adjustment. Bad debt given in the adjustment. I will use this way. Bad debt given in the adjustment should be subtracted. This is what about the balance amount we definitely get. And we still have some doubt those amount may be maybe also affected because of some other bad debt. So whenever we thought if there is any bad debt portion available, how can we handle a portion of the amount we expected as a bad debt from the debtors we have expected? It's not real one, it's expected. A portion or a percentage on this will be uh, created as provision for doubtful debts. So this is the provision for doubtful debts required to be created and maintained for meeting the bad debt in the coming year. Usually it is given in the adjustment. After that, whatever the balance is there will appear in the balance sheet. This is the first part. This is the first part. Is it okay? When it comes for the working note number 2, in working note number 2, how this is going to be handled by transferring to the P&L account is going to be discussed here. As per the working note number 2, bad debt, we are going to accumulate all the bad debts here. So bad debt given in the trial balance. Bad debt given in the trial balance is nothing but the entry for the bad debt is already passed. Because of passing the journal entry for the bad debt, it appears in the trial balance. And then the new bad debt given in the adjustment is subtracted here as well as also be clubbed with this bad debt. So that's why it is appearing in the two places. Anything appearing in the trial balance will be posted only once. When it appears in the adjustment, it should be posted twice, as the double entry is not over for these two. But in the very beginning, the bad debt appearing in the trial balance, already we could have passed the journal entry. For that, as we have passed the journal entry already, the double entry is over. We are going to transfer only once, that too in the debit side of the P&L account, or if we have the provision for doubtful debts, it may be adjusted there. And bad debt, adjusted bad debt and supposed to be adjusted to bad debt. Apart from that, for the incoming year we need to create the provision for doubtful debts, which is also given in the adjustment. So much of amount is required. One is bad debt adjusted one, another one is bad debt supposed to be adjusted, which is given in the adjustments. BDTB represents bad debt given in the trial balance. BDA represents the bad debt given in the adjustments. Apart from that, the third part, the provision for doubtful debts we want to create and maintain for meeting the subsequent bad debt happens the coming years. I hope so you don't have any confusions anymore here. And as these are the three things are in need, and find out if do I have any provision for doubtful debts in the previous year itself. How can I find out that provision for doubtful debts already appearing in the accounts? You can just refer the trial balance. If any balance appearing in the trial balance regarding the provision for doubtful debts, this is called opening balance available for meeting all these things. After that, whatever the amount is calculated subsequently, if the number is positive, it should be debited to the P&L account. If the number is negative, it should be credited to the P&L account. It's very simple. 5,000 rupees may be the bad debt already adjusted, and another 5,000 is the bad debt supposed to be created for the new loss, and in the coming year we expect another 8,000 may be lost in the case of bad debt. Overall the bad debt may be 18,000 rupees. In the previous year itself we have created the bad debt provisions for adjusting these values. That may be around 12,000 rupees. If we have 12,000 rupees already created, that provision for doubtful debts appears in the trial balance. As the provision appears in the trial balance is meant for adjusting or used for adjusting these losses. After adjusting, still there is 6,000 rupees shortage. As this value being shortage, it can be debited in the P&L account. And one more point, if the value is 18,000 rupees, if the provision for doubtful debts given in the trial balance seems to be 25,000, what does it mean? The overall bad debt as well as the provision for doubtful debt supposed to be adjusted in the incoming year, both put together is 18,000. Okay, but anyhow, for adjusting all these things, we have already provision for doubtful debts account, which is 25,000 rupees more than the amount required for adjusting. So still we have surplus. Hereafter that surplus is not required to be maintained, or that surplus can be credited to the P&L account. This is credited in the P&L account. This is debited in the P&L account. I hope so you could understand. Clear? So these are the points all we have discussed in the previous illustration. With these small discussions, let me proceed here. Apart from that, we have to understand the method of passing journal entry. Here the journal entry will be for this one. The journal entry will be for the new bad debt account debit, bad debt account debit, bad debt given in the adjustment account debit, right, to debtors. This is how we now subtract the bad debt from the debtors. This is the first journal entry. Second journal entry, we have to adjust all these bad debt in the P&L account. For that, the journal entry will be the bad debt should be adjusted in the PDD. The journal entry will be provision for doubtful debts account debit to bad debt. That's how we can adjust. This bad debt is nothing but the bad debt given in the adjustments as well as trial balance, both put together. Total bad debt. And third part is nothing but amount supposed to be created further as per the balance to be maintained here, which is nothing but this one. So for that, the journal entry will be profit and loss account debit to provision for doubtful debts to be maintained, which is nothing but PDD given in the adjustment. So the entry number 1 relates to this one. This is the number 1. Number 2, the adjustment of these two in the PDD account. Number 3 is nothing but the amount created by debiting to the P&L account to create and maintain the PDD to the extent required. I hope so you could now understand the structure here. With this small structure, let me proceed here to fill all these things. Okay, wait. Question number 5. In question number 5, on 1st April 2013, the balance of provisions for bad and doubtful debt was 13,000 rupees. This is nothing but the provision appearing in 2013. We are going to prepare for 13 and 14. It means it is opening provision for doubtful debts or provision for doubtful debts appearing in the trial balance. Clear? The bad debts during the year 13 and 14 being 9,500. The sundry debtors as on 31st March 2014 stood at rupees 3,25,000. Out of these debtors, 2,500 are bad and cannot be realized. And here is one bad debt. Here is already one bad debt, which is nothing but the bad debt already adjusted and appearing in the trial balance. And apart from that, after adjustment of this 9,500, the debtors appearing in the books is 3,25,000 rupees. And further 2,500 rupees is also be consider as bad from the 3,25,000, which is nothing but the amount supposed to be adjusted, which is now given in the adjustment. And the provision for bad and doubtful debt is to be raised at 5% on sundry debtors. So we have to create further 5%. This is nothing but provision for doubtful debts to be maintained, otherwise given in the adjustment. So we have found out what is called provision for doubtful debts given in the trial balance, what is called provision for doubtful debts given in the adjustment, and bad debt in the trial balance and bad debt in the adjustment. So we got all these things. I explained in detail all the background of these things in this class. I'm going to finish up the question number 5 by fitting into this format, right? Now, so this one, trial balance, bad debt given in the trial balance. Okay, where here is bad debt given in the trial balance. Here is this. The value being bad debt in trial balance 9,500. Bad debt in trial balance is 9,500. Come on, text me so that I'll be correcting if you are making any wrong. Make it faster. And this is nothing but, this is over. This is nothing but opening trial balance, means opening provision for doubtful debts. Otherwise, trial provision for doubtful debts appearing in the trial balance. So where here it is 13,000 rupees. Okay, 13,000 rupees. I hope so you could now understand this easily. The next one will be okay, one second. Okay, next will be yes, this 2,500, which is nothing but the bad debt given in the adjustment. Bad debt given in the adjustment will be posted twice, here and here. I explained all reasons already, so I'm just posting here. And here it is 3,25,000. The balance in the debtors account being 3,25,000 before this bad debt. So as this bad debt is there, you're subtracting from the debtors, because we are not going to recover 3,25,000. Out of 3,25,000, 2,500 will not be recoverable. So the balance being 3,22,500 could be recoverable here. Apart from that, the final one is 5% provision for doubtful debts to be maintained in the coming year, which is usually given in the adjustment. So I'm going to create 5% on this. So 3,22,500, 3,22,500 at the rate of 5%. At the rate of 5%, it is 16,125. 16,125. Anything given in the adjustment should be posted twice. So another one will be here, 16,125. Now, let me finish up this one. This part I'm going to finish up. So 3,22,500 minus 16,125. The answer is 6,375. 375. And then here you have to add all these things and subtract 13,000 from the summed up value here. So 9,500 plus 2,500, 12,000 rupees. With that, 16,125 should also be added. So the total value here is 28,125 rupees. From this value, the provision already available for meeting these losses is 13,000 rupees. Now I'm going to subtract the existing provisions from this particular value. So the final value to be debited in the P&L account is 15,125. I hope so you could now understand all this part. So let me post here. Bad debt given in the adjustment entry will be this one, first one, 2,500, 2,500. And provision for doubtful debts. Okay, total provision for doubtful debts, and the bad debt will be the amount available in the adjustment as well as trial balance both put together, which is nothing but summing up value of 9,500 and 2,500, which is 12,000 rupees. To the extent of bad debt available, completely charged to the provision for doubtful debts. And after charging the provision for doubtful debts, maybe in the shortage or surplus, whatever it may be, shortage or surplus. If there is a shortage, that can be debited to the P&L. If there is surplus, can be credited to the P&L account. As here there is a shortage, there's a shortage by 15,125, that should be created here. So 15,125. Okay, that's all. Remember the format and you can handle it easily. Number one, past necessary adjustment entries for bad debts and its provisions on 31st March 2014. So we have passed the journal entry and provision also prepared. Now, prepare the ledger accounts. Show the relevant items in the profit and loss account and balance sheet. Okay, so I'm going to finish up these two. For these journal entry, 3 marks will be there, and I'm going to prepare the ledger for that. 3 marks was there, and another 2 marks is for uh, the way how it is going to be appearing in the balance sheet and trial balance, means the profit and loss also shown. Let me work out that one now here. Okay, I hope so. You can see the page without any disturbances, right? If you find any trouble seeing the page, you can text me. Now, okay. Now, I'm going to open all the ledgers here. I'm going to open all the ledgers here. Okay, one second. Okay. So, what are the ledger accounts to be open? What are the ledger accounts are to be open? First one is bad debt. Bad debt. Bad debt. And two debtors, right? In bad debt, two debtors. Value rupees 2,500. And debtors account, of course, you can open the balance sheet also. You can open the balance sheet and the P&L account later. I'll be opening that also side by side. Listen here. One second. Yes. So I'm opening the balance sheet and other thing also here. Yes. How this will appear in the balance sheet. Okay. Once again. Okay. See here, profit and loss account and balance sheet. How this will appear in the P&L account. This working note will go to P&L account debit side. This will go to the balance sheet asset side. That's all. Very simple. I'll write the values here. Okay. Bad debt given in the trial balance, value being 9,500, and then the bad debt given in the adjustment, value being 2,500, and then the provision for doubtful debts given in the adjustment 16,125, and 28,125 minus provision for doubtful debts given in the trial balance, which is 13,000 rupees. Balance is in the debit side. If the balance is in the negative, if the balance is negative, then automatically it may be posted in the credit side. So the ultimate value here is 15,125 rupees. Is it clear? How this will appear in the balance sheet? It's very simple. Debtors being 3,25,000, and minus bad debt being 2,500, and 3,22,500. Actually, this is debtors. You no need to show this at all. And minus PDD, if any, can be subtracted. PDD in the adjustment will be subtracted from here to the extent of 16,125. After that, the debtors will be 3,06,375. So we should not show the bad debt in the balance sheet because the lost already removed. So you no need to show this. But anyhow, some text will do this way, means it is subtracted and shown like. But you can directly post from the debtors amount 3,22,500. Right. Now I'm posting all these things, the concerned ledger here. So how this will appear in the P&L account and balance sheet is explained here. So I'm going to open the PDD account. PDD account. Okay. In PDD account, two bad debt to bad debt, the bad debt being 12,000 rupees, right? And bad debt is already here, so by PDD account, value being 12,000 rupees. 12,000 rupees. Is it okay? And here is again PDD. So this is nothing but the amount supposed to be maintained. Okay. PDD given in the adjustment. So bad debt to profit and loss account. To profit and loss account. Sorry. Okay. Profit and loss account debit to bad debt. Sorry. Profit and loss account debit to bad debt. So 15,125. We got it. Okay. Now remember, the items available in the trial balance, the items already available in the trial balances are the opening balances, will appear in the concern ledger. These are the opening balances. Bad debt given in the debit side is the opening balance of the bad debt. Usually bad debt appears in the debit side. Automatically in the bad debt, we have to write in the debit side as balance brought down. Opening balance, the value being 9,500. 9,500. Once again, I'll just stand corrected here. Once again, I'll just correct here. Mm. The last one is P&L account debit to PDD. It should come only in the PDD account. Okay, I stand corrected. Sorry, by what happened? By P&L account 15,125. Okay, 15,125. Now, the items appearing in the trial balance already is nothing but the balances only. If it appears in the debit side, that should go to the concern accounts debit side. If it appears in the credit side, that should go to the concern accounts credit side. Such that I am going to now record. See here, this is the first item, 9,500, which is appearing in the trial balance. Usually it is in the debit side. So in that bad debt, in the debit side, I will write that as a balance, 9,500. And another one is here, this one, 13,000 rupees. PDD. In PDD, we have to now show this. Usually PDD in the trial balance appears in the credit set. So I am going to write the value in the credit sets as this way. Balance 13,000 rupees. That's all. Okay, so how this will appear in the P&L account? This 15,125 will be transferable to the P&L account. In P&L account, we got 15,125. You no need to uh, post all this working here. But anyhow, I just do all these things and the final value is 15,125 we have posted. Of course, we have recorded this debtors also. This value is adjusted from the balance sheet items itself, right? Now I'm going to close the bad debt and PDD account. So if I close this, what happens? What happens? Now here is one more thing. Okay, this one PDD in the adjustment, PDD in the adjustments. I'll get back on. I will get back this one now by tallying the ledgers here. If I tally the bad debt, 9,500 plus 2,500, 12,000 rupees in the debit side and 12,000 rupees in the okay, 12,000 rupees. So bad debt is correct. And when it comes for the PDD, if you tally what happens, 28,125, 28,125. So here we get how much? Is it 16,125? Am I right? This is nothing but closing balance. This closing balance is nothing but the PDD available to meet the bad debt in the incoming year. So we are not going to use this for the current year. We are going to use that in the next year, not in this year. Not in this year. That's why the PDD account is not tallying. The balance is nothing but balance provision for doubtful debts. That will be carried to the balance sheet. Is it okay? And P&L account only we are preparing the extract. It's not complete P&L account. Only the provisions related to the bad debt is recorded. And in balance sheet also we have posted only the debtors related information. We are not aware about the other information. It's not a comprehensive sum. We are handling only with respect to the bad debt provision for doubtful debts by way of preparing the working notes and passing the journal entry, by preparing the ledger, and how this may be recorded in the P&L account as well as balance sheet in the extract form is posted here. I hope so could now understand. Come on, copy. Now Let us start with the illustration number. Question number 6. Trial balance of Mr. X is given below. Below that, closing stock was valued at rupees 3000. Closing stock of stationery was valued at 450. Write off 100 rupees for bad debt. Provision for doubtful debts is to be maintained at 10% per annum. Create provision for discount on debtors and reserve for discount on creditors. So these are the two additional items we are going to study in this illustration. So with that, all the items are over. Right. In the previous class, we have already learned the method of passing the journal entry for uh, adjustments of opening stock and closing stock. Let me now proceed here. Here is the opening stock. Okay, here is the opening stock. For that, the journal entry will be, for this, the journal entry will be, come on, get me the journal entry for the opening stock. Usually the journal entry for the opening stock is nothing but adjustment of opening stock in purchases or sales. We have already seen in the previous class. Let's see here. Come on, pass the journal entry for opening stock. Opening stock should be addable to the purchases. So purchases account debit, first entry. Purchases account debit, purchases account debit to stock opening, the value being 1000, the value being 1000. And for the closing stock, 3000, the journal entry will be, the journal entry for the closing stock is stock closing account debit, stock closing account debit. This was already seen in the previous class, so I may post it a bit faster. Stock closing account debit to purchases. These two are adjusted in the purchases itself. The value being 3000 rupees. I pass the journal entries also for preparing the trial balance. Of course, you no need to use these journal entries for preparing the final accounts. You can directly work out that one also, no problem. Right. Similarly, we have the stationery. Here we have opening stock of stationery. The same way, how do we handle for purchases now? The same way we are going to treat for opening stock of stationery and closing stock of stationery also. But rather than adjusting that in the purchases, whenever you purchase a stationery, it is named as stationery only. So I'm going to adjust that value in this stationery. So the value will be stationery account debit, stationery account debit to opening stock of stationery, okay, stationery, the value being 250. Similarly, for the closing stock, the entry will be stock of stationery, closing stationery account debit to stationery account, okay. So the value here being 450, the value here being 450, okay, 450. I hope so. 450. I hope so. Could not understand this. Third, write off 100 rupees for bad debt. Write off 100 rupees for bad debt. When the bad debt comes, it is better to form the format here. Now, I'm going to give the format here. Let's see here. I'll give the formats here. Right. Now, the item appearing in the balance sheet and then the P&L account, I'll just directly post here. Rather than preparing that as a separate format, I'm going to record that here itself. This is trading and P&L account. This is trading and profit and loss account. This is balance sheet. Okay, how do we now post this? Very simple. When it comes for the debtors account minus bad debt given in the adjustment, bad debt given in the adjustment, and with that, whatever the value you get, you have to create the provision for doubtful debts as per the rate given in the adjustment. Now from this, I'm going to create provision for discount on debtors also. So from this, I'm going to subtract the provision for discount on debtors given in the adjustment. Is it okay? I hope so. Could not understand this. Clear? Provision for doubtful debts given in the adjustment. And how this will appear? This is the new one, similar to the provision for discount on debtors. To name it differently, provision for discount. Okay, in the adjustment. Okay. Sir, what is called provision for discount, sir? The some payer defaults, some payer pay promptly. The prompt payer may expect something to be paid immediately. Sir, kindly help me out. That's how they can demand. If they demand something, we now need to offer them. This is how the thing comes here. Clear? And how this will appear in the trading and P&L accounts? Very simple. Already gave the format. Bad debt given in the adjustment, and bad debt given in the trial balance, and provision for doubtful debts supposed to be maintained in the coming year given in the adjustment, and all these things put together will be uh, posted in the either P&L account or trading P&L accounts debit side or credit side only after adjusting the PDD already available. This is opening provision, trial balance, the amount available in the PDD means trial balance. Apart from that, we have the provision for discount also in this illustration. So provision for discount and debtors is a separate item. Usually we are creating a provisions from the P&L account. Otherwise, the P&L account is debited and created here. So provision for debtors, discount, provision for discount. Okay, given in the adjustments to be created. If the provision already exists, that can be posted on the opposite side, or you can subtract from here. That way also you can do it. Okay. So provision for discount. So I'll write it short this way: provision for discount in the trial means adjustments, the amount available in the adjustment, minus provision for discount in the trial balance. In the trial balance should be subtracted. Okay, this is something new, different. We have not seen. Okay, the prompt payer says they are defaulting. I'm paying promptly. Do you mind us paying something? If you are giving some favor by way of discount, we are pretty happy to have a consistent trade with you. So that's how they can negotiate. Okay, we'll offer some discount. So this is voluntary. We happily offer them some concession. But bad debt is nothing but he could not pay it, and he is not in a position to pay it. Financially, he may be weaker, or because of the dispute, we may don't get this money. We may not get this money. So these things will happen. But the format is given here, right? So write off bad debt, write off bad debt. So this 3, 4, 5, all the three will be posted later. All the three will be posted later. And here reserve for discount on creditors is there. Similar to the provision for discount, we have the reserve for discount on creditors also. So creditors minus provision for discount given in the adjustment is subtracted here. This is gain for us, so it will appear in the credit side. So provision for discount on creditors given in where? In the adjustment. And if we already have in the trial balance, that should be subtracted. So balance will appear here. That's all. This is inverse of the provision for discount on debtors. Like the provision for discount on debtors similar to the provision for discount on debtors, bad debt, provision for doubtful debts, provision for the doubtful debts as well as provision for discount on debtors, both are same. The treatments are same. The extra point to be noted here is this is voluntary, happily given. This is the inability of this payer, or because of the defect we fail to recover the full money. This is possible, right? With this briefing, these are going to be posted later. These are the things that are going to be posted later. Probably I'll now finalize those issue with respect to the debtors. 1000 rupees you are aware about that assets will be shown directly here. We don't pass any journal entry here. And purchases account. Purchases account will go to the P&L account. This will go to the trading account. Carriage in will go to the trading account. Admin expenses will go to the P&L account. Selling expenses will go to the P&L account. Fixed assets investment will go to the balance sheet. Now I'll write here fixed asset directly, because for the assets and liabilities we usually don't pass the journal entry, can be directly posted in the balance sheet. If these are assets, will be debited, means debit side values related to the assets will be transferable to the asset side of the balance sheet. So here fixed assets being 4,000, and next one is investment. The investment should also be posted here. That value is 2,000 rupees, and then debtors 1,000 rupees is already posted, subject to some more adjustment. Cash is also an asset. I'll write here cash, the value being 1,000 rupees. 1,000 rupees. Stationery cannot be posted. Opening stock of stationery cannot be posted, because these two are the P&L account items, nominal items. We will be transferring to the P&L account rather than directly posting that in the P&L account. I will pass the journal entry first of all. I pass the journal entry and then post. As a journal entry, I am posting. That means it gives more confidence that these things are transferred to the trading and P&L account through the journal entry. That's how you can understand. That's why I just kept it pending, not posted directly. And opening stock will also be, bad debt will also be, discount and debtors will also be, provision for discount and creditors and all. Okay, all these things are nominal items. So nominal account we have to keep it pending. Then let me start with the liabilities value in the credit side. So sales will come in the trading account. Capital is a liability. I will start with this, right? Capital, the value being 5,000 rupees. 5,000 rupees. Apart from that, we have 10% loan. 10% loan, the value being 5,000. Liabilities. So this is liability. This is liability. Actually, this is capital, right? Internal liability. The capital is otherwise named as internal liability. Creditors. Here we have, this is also liability. Here we have 1,000 rupees. 1,000 rupees. Then provision for doubtful debts and provision for discount and debtors, discount and creditors. These are the items we supposed to discuss now. Right. Let's see here. Before we pass the journal entry for the rest of the things, first of all, these items are the opening stock and all these things. No, we are going to adjust the bad debt related. So bad debt related, I mark in red. Bad debt related, discount on debtors, okay, and provision for discount on creditors. So these are the things will be recorded now. Similarly, here also, credit side, provision for doubtful debts we have, provision for discount on debtors we have, discount on creditors we have. These are a bunch of transactions. I am going to post now. Bad debt. Because it is going to be posted in the working note. Bad debt in the trial balance will come where? Here. The value being 100. I'm writing all these things in red so that you will understand these things. It should be recorded as a working note. Later it can be posted to the trial balance, in the trading and P&L account as well as balance sheet, or directly you can post those values in the trading and P&L account as well as the balance sheet in the inner column, and after the adjustment can be posted to the outer column, right? So loan is 4,000. Okay, let me stand corrected here. Loan is 4,000 rupees. It's not 5,000, it's a 4,000, right? Thank you. Now, so bad debt in trial balance is, it's bad debt in trial balance, sorry. Yeah. This one is 4,000 and bad debt in trial balance 100. Okay, discount on debtors 50. It's a separate one. Discount on debtors. I will write here discount on debtors, value being 50. Similar to bad debt. Provision for discount on creditors, already we have posted here. Provision for discount on creditors 25. Okay, and similarly here, provision for doubtful debts 150. Provision for doubtful debts given in the trial balance. So PDD in the trial balance, this one, the value being 150. And then provision for discount on debtors 40 in the trial balance, here is 40. Here is 40. And discount on creditors 35. That should come only in the credit side. Discount on creditors. Is it okay? 35. If we are getting the discount from the creditors, then we are pretty happy, should be credited. Right. This component you have to be carefully understand this. Now we have passed the journal entry for closing stock and we have passed the journal entry for this one. Now this one, bad debt. This bad debt will be posted twice. Here it should be subtracted from the debtors. Again it will be posted here, bad debt in the adjustments twice. And this is over, double entry. See, whenever it's an adjustment, you have to pass the journal entry. Passing the journal entry means it will have equivalent debit and credit. Similarly, provision for doubtful debts to be maintained at the rate of 10%. So, from the 1100 rupees is subtracted. Now we guarantee 900 rupees could be recoverable, not confirmed, could be recoverable. In that also, some people may default. To meet the default losses, we are creating around 10% provisions for that. So, 90 rupees is created. After that, we have how much? 810. The created, whatever the value you are going to show from the adjustment should be posted twice. So one place is here, another place is provision for doubtful debts in adjustment should be posted here, 90. Similarly, create a provision for discount on debtors and creditors at the rate of 5%. So 5% provision for discount on debtors and creditors will be created. This is the amount we realize could be recoverable. Though this amount is recoverable, the payer may demand some discount, so we have to offer them some discount, right? So for that we are making a provision, so which is 41 rupees. 5% on that is 40 rupees 50 paise, but I can round off to 41, and that value will appear where? That value will appear here, provision for discount 41 will appear here. Clear? I hope so you could understand. These are the cases. Okay, now leaving this, rest of the things are very simple. I'm going to pass the journal entry for the rest of the things. Okay, let's see here. Purchases debit 1000. It means you're going to add 1000 with this. Okay, 1000 is going to be addable. Whatever the journal entry we have passed will be now incorporated here. Here purchases debit means already purchases 5000 rupees. With that we have to add 1000 rupees. And opening stock credit, we have opening stock already in the debit side. By crediting it becomes 0. And stock closing comes as a fresh one, new one comes in the debit side. So in trial balance it comes as a closing stock in the debit side to the extent of 1000 rupees. And as it comes in the debit side, it should be subtracted from the purchases as it is in credit side. So minus 3000 rupees. Is it okay? This is not 1000, 3000, sorry. Similarly, stationery debit, already we have stationery 250. With that we have to add 258. 800 already we have. With that 250 is added. And opening stock of stationery, I am passing the journal entry for that, and because of passing the journal entry, the opening stock of stationery becomes credited. But originally the opening stock of stationery in the debit side, so by crediting it, it gets cancelled. And closing stock of stationery will be a new one, will come here in the debit side. So closing stock of stationery value being 450, and this will be now adjusted in the stationery. It should be subtracted, means usually stationery is in the debit balance. As it is now credited, it's subtracted. 450 is subtracted here. Now after doing all these adjustments, how this will appear? Now let's see here. The purchase becomes what? 1000 is added, 3000 is subtracted, so the new purchases value being 3000. Similarly, here stationery account 250 is added, 450 is subtracted. Now what happens here? The revised value of stationery is 600 rupees. Am I right? Yes or no? So 250 is added with the 800 rupees and 450 is subtracted. Okay, so then it becomes 600 rupees. Right. So we have posted all these things, and newly we have two more items to be incorporated. With this information, now I'm going to pass the journal entry. This is trading account item. This is trading account item, right? So those items are named as trading, will be transferable to the trading account. You can pass the journal entry also. As these things are the debit items and related to the trading account, it will come in the debit side of the trading account. So two purchases, the value being 3,000 rupees after the adjustment. Carriage in, the value being 1,000. There is no any adjustment here. And admin expenses and selling expenses both will come in the P&L account the second half. So admin expenses being 1,000, selling expenses being 1,000. Selling expenses being 1,000. Okay. Now rest of the things were already posted. These things were already posted. Okay. Closing stock will come in the balance sheet asset side. So closing stock or stock in trade simply. Value being 3,000 rupees. Apart from that, stationary stock. The stationary stock here being 450. Stationary stock being 450. So we have posted all this value. Now I'll be moving on to the credit side. So sales trading account will come in the trading accounts credit side. So by sales, value being 8,000 rupees, and here capital, I will write the value here. 5,000 already posted, 10% loan posted, creditors also already posted, right? Clear? Now in adjustment, provision for discount on debtors 5% to be created. I missed that, so I'm creating here 50 rupees. So thereafter it is only 950. That 50 rupees will come here. Okay, mind this. That's all. Okay. So I've just skipped the journal entry for this part now for the time being. Come on, tally this and get me the total. This total will be the GP here. Make it faster. What's the GP here? So 8,000 rupees, 8,000 rupees and 4,000 rupees is the GP. This GP will come here. GP 4,000 rupees. And you can solve this by tallying this and you can find out the net profit. You can find out the net profit. Is it okay? Come on, find out the net profit here. Okay. Make it faster. 4,000. This is 50 is plus minus 25. The value is 35. Sorry, 25. So 25 plus 35, 60. Then the total in the credit side is 4,060. Now you have to consider all these portion put together and get the value first. 100 plus 100 plus 90, 290. From 290, 150 is subtracted to find out the balance 140. And of course you can do addition and deletion of all these things and you can find out the balance here. That balance being 41 minus 40 plus 50. So the value being 51. So in the text I have given the 1,000 rupees, 1,000 rupees, selling expenses 1,000 and 1,000, and stationery 600. We have to post that stationery. I have not posted that. That is again 600 rupees. And provision for doubtful debts 140 we have arrived at, and provision for discount and debtors 51 and 51 arrived. So if I tally, then definitely I will get the net profit, which is 1,269. Is a part of the owner's fund. So I am going to add here. So net profit being 1,269. So here the creditors is only 950 after subtracting the 50 rupees. Similarly, in the debtors account, after adjustments of all these things, the value will be, final value will be how much? 769, I think so. 769 debtors. Okay, yes, 769 is there. If I tally the balance sheet, the balance sheet total being 11,219. Here I have just passed only the entries related to the stocks. Others not. Stocks and stationary stock and normal stocks, for that I have just passed. Others I have not passed. Clear? Come on, copy this all. Make it faster.